Well, hey, greetings, folks. Ed Downs here with an Intelligent Fund Management Progress Report for today, November 2nd, 2023. And as you know, OmniFunds 3.0, this new version, is based on performance-based switching between multiple portfolios. In the beginning, there were just two. It was the same two forever. Well, now you can have as many portfolios as you want in OmniFunds, and it will switch between them based on the performance of the funds. And this analysis was performed by Mark Holstius in the summer, and of course we covered that quite extensively in the prior blog posts. But essentially, you got all these portfolios here. There's 15 of them, and from the beginning, however they were behaving was fine, but over time, they have different things happen. They go down, they go up, they go sideways. And so what you want to do is pick the best of the best and trade them. So from the spreadsheet that Mark generated, selecting the portfolios based on their individual performance, he was able to turn this into this. So that's what we're after, and of course we've talked quite a bit about that. Now, today we have actually implemented this in OmniFunds, and it was fairly challenging because it was designed for just two, and so now you can have as many as you want. So it's kind of a big deal. But this picture, I've got 6 different portfolios, which is what OmniFunds are built on. And here's the curves for them. And so if I go to the level above this, where it shows the fund itself, this is, again, from the site, we have a fund selected here, and then there's the curve for it. So very nice, smooth performance. Of course, we have this right here happening, and we go, gosh, we wish that didn't happen. But we know that 2022 was a severe down market, so okay, well, that might be expected. But the question still remains, is there a way to reduce those drawdowns? And I want to say that I think there is. Let's look at that. So here is a OmniFund that I picked out, and the reason I picked it is because of this. That we've had a bear market recently, we all know that, and so during that bear market, we basically lost pretty much all the gains from this portfolio. It was up, 20%, and then just kind of gave them back. So the question is, well, why'd that happen? And if we look into the problem a little bit closer, these are the different symbols that this OmniFund was switching into. July, August, September, October. Let's look at just October, where it switched into ATRI, EW, HSY, and ICUI. And if we look at those symbols right here where that switching occurred, you can see that there it is, October 1st, in the month of October. 3 out of 4 of these just kept going down. Okay, so, and the way OmniFunds was originally built was like the robo-advisor model, where you switch once a month, you leave everything alone, you go a month into the future, and then you switch again. Well, that's pretty crude. Okay, we're actually trading here. It's really not kind of a, take a bunch of ETFs and switch into the ones that have gone down the most, which is what they do. So we really have the opportunity to do better than that. And looking at this problem, I realized that if we just add an exit condition, something that says, look, no matter where you switched into something, you check every day, and if you've gone down a certain amount, going through a moving average or whatever, you just get out of that trade, and then you can get into another one that isn't doing that. So that's essentially the thing that we've added, and this talked about it, I think 2 blog posts ago that we were looking at it. So now you've actually added it. There it is in the interface. And of course, all these different things, the filtering, the ranking, the market state, are all on a sector level. And so we've added this now. Exit on, I have close less than EMA 20. It could be any condition. And so that's there. And we're starting to test that. Now, the other thing that I realized recently in working with this is that it's kind of slow working with OmniFunds itself because it's server-based. You can make a change and you say, okay, go run that. It queues it up on the server, and after a while it comes back. We have a really good tool for developing trading approaches, and it's called ATM, Advanced Trade Methodology. And it's really, really good. The thing about it, though, I couldn't create an OmniFund experience in ATM because ATM, like OmniTrader, it's part of OmniTrader, is based on signals. You have to have a signal to get into a trade. You can't just have something that has a condition like a filter that says, hey, this is a good stock right now. It's trending up. It's above all the moving averages. It's very smooth. It looks great. No, you got to have a signal. So if you make one, that's fine, and you can make one from those conditions. But what if you don't look at it on the day the signal occurred? What if you're looking at it 2 or 3 days later? Well, you can't trade it. That's just how it's built. It's built on signals. So we recently added this capability to trade in progress, or actually they're called in-trade signals from OmniTrader. So whenever it's getting out of a position, any symbol that is in trade from a signal in the past can be entered dynamically. So that means in ATM, we can now test the OmniFunds approach very quickly. And I'm telling you, we just got this today. They're putting the final tests on it. We'll start running it on Monday to start working on these OmniFunds. But I'm so excited about this because it's going to make it so much quicker than the way we used to do it. So thanks, programmers, for giving us that. It's awesome. All right, let's talk about artificial intelligence for a second. In the last post, I talked about an experiment I did with ChatGPT. Now, I've been doing AI things kind of continuously since we started this. You've seen I've posted about, putting Python on my computer and getting some models and running them and, all these things because I really want to take advantage of the modern AI that's out there for OmniFunds for sure and for other things that we have. So I've been, part of my time researching this, and I was really excited about that ChatGPT experiment. I actually put a link to this spreadsheet in the last blog post. So you haven't looked at it, you might want to check it out. It's really pretty cool. Basically, creating a pseudo-random equation which looks like this, and then trying to predict values out in the future. And it was really, really, really accurate. Not the same as stock market data, but a really good indication of how well a model from one of these kind of canned AI systems can work. So the next thing we're doing is pushing market data through this to see if it could be predictive on that, and then using different models, because there are many different AI models you can select from. The great thing about ChatGPT is it can kind of help you do it. You talk to it, and you say, I'm trying to do this. And he goes, well, try random forest, try whatever. So it's really, really cool technology. I can't believe how good it is. So I'm excited about that. And I'm going to keep pushing on the AI aspect of our problem because we can use regular indicators for ranking. We can do that. It's fine. Looking at volatility measures and different things. But what I really want is for an AI to rank the opportunities every day and say, this one has high probability. We can use our GA. It's pretty good, but I think we're beyond that now. I think there's just better stuff out there. And so I'm going to continue to investigate this, and I'll keep you posted what I find. But I do believe that I will solve the problem of finding the right AI to use in OmniFunds. So I'm going to keep going on that. All right, so the last thing I talk about here is the alpha. We are working towards an alpha. Due to some illness and things, we're later than I wanted to be in getting this out, but we're now working on the interface. This is from the specification, where you can pick different portfolios, see what they look like, check the little boxes over here, and they do this, and they show up on the chart up here, and then you can say, okay, what does the combined thing look like if you run it? So you save it and then run it. If you've used OmniFunds, that's how it works. So, but this is new, the ability to pick multiples. It's really powerful. We'll have constraints. You can pick the portfolios that have certain characteristics, and then there you go. So excited about it. Working very hard to make this happen as quickly as we can in November, and also, as I just talked about with ATM, creating new portfolios that take advantage of the exit condition feature. So ATM can get into anything, but then this new feature, which we can model in ATM very easily, has been replicated in OmniFunds so that we can get out of things that are going against us. All right, so very quick update today, but I wanted to share with you what's going on. That's OmniFunds today, November 2nd. And I will continue to update you. You'll probably see more frequent updates now because we're moving much quicker after we got past the validation of the spreadsheet. That really took a while, but now we're rolling. So expect updates quicker, and I'm excited about this. And I just really appreciate all of y'all's involvement, your investment. And, we have quite a few members really using this and getting in there and making portfolios, making OmniFunds. So I'm recruiting you guys, those guys, the folks in our group that are doing that, to help me with the portfolio development on sort of the back end of this. So super excited about it. I'll continue to keep you informed as we go forward. All right, folks. Thanks so much. And I hope you have a great weekend, and we'll be talking to you really soon. Take care. Good night.